Welcome to this Fox Williams webinar on the basics of ATOL. For those of you that don't know me, my name is Rhys Griffiths. I'm a partner and the head of the travel group at Fox Williams. I'm joined today by Lucy England, who's a partner and also a travel specialist with me at Fox Williams. And we're joined today as well by Jake Cohen, who is a qualified accountant at White Hart Associates. And before joining White Hart, Jake was for 14 years a member of the Civil Aviation Authority and the team which dealt with the top 100 ATOL holders. So we're hoping that Jake will be able to give us a good insight today into some of the perspectives of the regulators on these issues. So as I said, the session today is around the basics of ATOL, and the way that we've structured the talk is that Lucy and I are going to talk about the legal aspects of ATOL, and that's explaining what is ATOL, the type of activity which brings travel companies within the ATOL scheme, and the availability of certain legal exemptions from ATOL. And then after we have covered the legal aspects, we'll hand on to Jake to talk about some of the practicalities of ATOL, particularly the process of applying for an ATOL, the process of maintaining an ATOL, what has to be done once you hold an ATOL, where the focus tends to be more on the financial side of things rather than legal. So definitely makes sense to hear from an accountant on those issues. We are aiming to present for around 40 to 45 minutes. The session is down for an hour. We will guillotine at the end of the hour if we're still going. We're going to try and leave some time at the end for Q&As. So if anybody has any questions to ask, then there is a button where you can submit your questions, and we will deal with those towards the end of the session. And we'll deal with questions on an anonymized basis. So please feel free to ask, what you may consider to be a silly question. We won't attribute it to anybody. Before we start, just one other housekeeping matter. This session is being recorded. We will circulate the recording and also the slides to the session after the talk. Don't worry, we can't see any of the delegates, so your cameras are off, so to speak. But we will be circulating this to everyone after the session finishes. So on that note, I'm going to hand over to Lucy to begin with looking at what is ATOL.
Great, thanks, Rhys. Good morning, everybody. It's nice to speak to you again today. Hope everybody is well. So yes, let's start with just the basics of what ATOL is. It stands for Air Travel Organisers Licence, and it's a licensing scheme for organisations which sell flights to the UK market. That's the key bit, it's into the UK market. The scheme, it exists to protect consumers if a travel organiser fails. It provides a refund to the consumers, or it repatriates customers who are abroad when that travel company fails. An organisation doesn't have to be based in the UK to be caught by the scheme. It applies to organisations anywhere in the world if they target sales into the UK. It applies to flight-only sales and also flight-inclusive package holidays, and we'll probably talk a bit later about the interplay with the Package Travel Directive. But anything with a flight, it catches. The scheme is overseen by the Civil Aviation Authority in the UK. It was originally introduced in the 1970s and has been going since then. The applicable legislation is the ATOL Regulations 2012, but they've been updated a number of times, most recently in 2020. So although they sound old, they're not. They're very up to date and in obviously conformance with the Package Travel Directive as well. And ATOL applies to both B2B sales and B2C sales. I think some people think it only applies to consumer-facing sales, but it does also apply if one business is selling to another business. So that's the basics. So let's move on to when you need an ATOL. there's basically three types of regulated activity set out in the ATOL regulations, and you need an ATOL if you carry out any of these activities. The first one is making available flights. The regulations call it flight accommodation, and the language is a bit clumsy, but making available flights is the test. Procuring flights as an agent for the consumer is the second regulated activity. And the third one is if you facilitate others in making available flights. So I'll hand over to Rhys, who's going to look at each of these in more detail.
Thanks, Lucy. So yeah, the first type of regulated activity is this sort of concept of making available flight accommodation. So before 2018, this was the only type of regulated activity, and then changes that the second and third type of regulated activity was introduced in 2018. And it's a very generic phrase, and I think it's intended to be generic because it's intended to be very broad. And the way I think of it, when I consider what this phrase means and looking at some of the case law on it, it effectively means anyone involved in the flight supply chain. And it can apply in any one transactions at different levels of that supply chain. So it applies to anyone who is involved in the process of kind of passing that flight down from the airline to the customer. I mean, that's very sort of generic way of describing it, but that's I think a very sort of practical way of thinking about what this phrase means. So it applies to the aircraft operator itself, although there is an exemption which for aircraft operators, which we will look at slightly later. And then, coming down a level in the supply chain, organizers which package up flights and sell those to customers are considered to be making available flights. If you have flight-only sellers which sell flights, I should say, either as a principal or an agent, then they're considered to be courts. And like I said, agents for airlines, but also agents for organizers are caught by this concept of making available flights, although there is an exemption for certain types of agents, which Lucy will explain later. And that's how things were until about 2018. There was, up until that point, some doubt or some debate in the industry about whether this first category caught travel agents which were appointed by consumers to purchase flights on their behalf. And I think the prevailing view, certainly of the advisors, possibly not the regulators in the industry, was that agents for the consumers probably fell outside of this definition. And similarly, the situation of platforms was again unclear. And by platforms, I mean an eBay type platform which doesn't, buy or sell flights. It isn't appointed as an agent for either the buyer or the seller, but just creates the technology or the forum for buyers and sellers to interact and to trade with each other. And again, there was some doubts pre-2018 about whether those sorts of business models were caught by this concept of making available flight accommodation. But as I'll flip onto in a second, these sort of perceived loopholes pre-2018 have now been closed. One final thing to say here, and just by way of passing, is ATOL does actually apply B2B as well as B2C. So if you take an example of travel company A buying a flight from an airline and then selling that flight whether on its own or as part of a package to company B, which company B then sells to the customer, that transaction between company A and company B is caught by this concept of making available flight accommodation and does require ATOL licensing, although it requires a particular type of license known as a trade ATOL. I only mention that in passing. It's a very small aspect of ATOL, which we're not going to cover in any great detail today, if at all, but I just mention it so that people are aware. The real focus of today is going to be on more traditional B2C sales. If you can flip to the next slide, please, Jess, thanks. So yeah, like I said, in 2018, the government extended the reach of the ATOL regulations by making changes to the regulations to try and close this sort of perceived ATOL loophole. And I think this type of business model of acting as the agent for the consumer was probably most prevalent in the online markets, particularly online travel agents, which made it clear in their customer terms and conditions that they were appointed as the agent of the customer when the customer was buying a low-cost flight, because often the online travel agent didn't have any formal agency agreements with the airline. So the OTA wasn't appointed by the airline to sell the flights as an agent, couldn't therefore be said to be making available flights. And pre-2018, it was arguable that they weren't caught by the ATOL regulations at all. So anyway, this issue was just closed off in 2018. We now have this second type of regulated activity, which captures anyone, any sort of travel company, which acts as the agent of the customer when procuring flights. And that then brings within the ATOL scheme, that sort of OTA model that I've just described. Next slide, please, Jess. And then similarly, although not sort of expressly referring to platforms, and that this third type of regulated activity clearly is designed to close off a potential other loophole, which is that sort of eBay type model where there is just a web platform. I suppose in the travel industry, the most obvious one would be something like Airbnb, although they don't sell flights. But it's a situation where there is a platform which connects sellers and buyers. And the ATOL regulations were changed by the introduction of this new category to bring within ATOL anyone who facilitates somebody else to make available flight accommodation, provided that this company also receives the customer payment from receive credit or debit card payments, and then passes either all or part of that on to the company which is actually making available flight accommodation. So it seems to me that would probably capture your platform marketplace type business model, which just connects sellers and buyers, provided that the platform does actually receive the customer payment, acts as the merchant of records, and then passes it on to the seller. Next slides, please, Jess. So that's it in terms of the three types of regulated activity. It is very broad, and I think it would be a fair assumption to make that anyone involved in transacting flights in any way is probably caught. It's going to be very difficult to make an argument now that sort of activity doesn't fall within one of the three categories of regulated activity, but there are very many exceptions to ATOL, and I'll pass back to Lucy to take you through some of those.
Thanks, Rhys. Yeah, so like Rhys said, there are a number of exceptions, exemptions in the ATOL regs and an accompanying document, which you may fall within if you're selling flights. And if an exemption does apply, then you don't need an ATOL. There are two types of exemption: general exemptions, which apply to any organisation, and like blanket exemptions, which apply to any organisations or sales which fall within the terms of that exemption. Or there are specific exemptions which organisations can apply for, and then they would only apply to that named company that has applied for it. It's possible for some sales of an organisation to be exempt from ATOL, but others not to be exempt. So you need to look at particular categories of sales to see what's caught and what's not, and what's exempt and what's not. So we will just walk through some of the most common general exemptions. The next slide, please, Jess. So the first one is aircraft operators themselves. As Rhys said a couple of minutes ago, they are themselves exempt from needing an ATOL license, but the exemption doesn't apply if the airline itself sells packages or sells holidays. So, for example, selling a flight plus car hire would still require an ATOL license because that's a package. It's pure flight sales, which are by an aircraft operator, which are exempt. And if the airline does sell packages, it still must comply with the PTRs and provide insolvency protection in that way, which is something we may talk about a little bit later. So that was the first exemption. The second one is if you're an agent for an ATOL holder, and this is very common between tour operators who would hold the ATOL license and the travel agents. They would effectively rely on the ATOL and sell under the umbrella of the ATOL of the tour operator. But the condition for this exemption is that there's a specific ATOL agency agreement in place between the ATOL holder and the ATOL agent. And it's particular provisions, particular clauses, which must be in that agreement, which are set out in a document which is called Official Record Series 3. So I should have said at the top, these exemptions are some of them are in the ATOL regulations themselves. Others are in a document called Official Record Series 3, which is a CAA document which is kept updated, and exemptions get added to in that document sometimes rather than amending the regulation themselves. So that was the second exemption. The third exemption is airline ticket agents. This applies to flight-only sales made by obviously an airline ticket agent. And again, there must be a written agreement between the agent and the airline. And the condition, another condition is that the agent must immediately supply a confirmed ticket after receiving payment from the customer. The payment doesn't have to go directly to the airline, but the consumer must be issued with a ticket immediately is the term, and there's a bit of debate on how immediate means. So they're the first three exemptions. I'll just hand back to Rhys to cover a couple more.
Thanks, Lucy. Sorry, I was struggling to find the unmute button there. So the flight-only ticket fully paid exemption, which I'll just call the flight-only exemption, is a exemption which applies where the customer basically buys a flight from the travel company. The travel company, immediately pays the airline for that, and the travel company immediately gives the customer a confirmed flight ticket for the sale. So the rationale behind this exemption is that the transaction is pretty much the same as if the customer had bought the ticket directly from the airline, because the money goes immediately to the airline and the ticket goes immediately to the customer. And so given that transactions directly between the customer and the airline are exempt, we might as well exempt another sort of transaction which is pretty much identical to that airline exemption. So that's the reason for the flight only ticket fully paid exemption. I mean, the actual terms of the exemption are quite long and quite detailed. As Lucy says, it's in Official Record Series 3. So, this is a very brief summary of that. So I'd encourage anyone thinking of relying upon this exemption to look carefully at the terms of the exemption. But by and large, it is relied upon by most travel companies which sell low-cost carrier flights, and other situations where there's a direct relationship between the travel company and the airline. The other exemption which I mentioned here, sorry, there's another two, but the IATA exemption is basically an exemption which is available for IATA accredited agents, which sell flight only to customers. And provided that the travel company is IATA accredited and has signed the passenger sales agency agreement and is abiding by the IATA rules, then those transactions, provided they are flight only, are exempt from the ATOL scheme. And the basis for that is, again, that actually the insolvency risk is to the customer is quite low, because if the travel company is insolvent, the airline is still obliged to provide the flight to the customer pursuant to the IATA rules, and IATA take care of the bonding requirements there to look after the airline to minimize the risk. So again, there's 2 pages of text in the relevant exemption setting out how it works in detail and the requirements for the travel company. But provided you can bring yourself within that particular framework, then you can rely upon this IATA exemption. And the last one I mentioned is the business travel exemption, and this is pretty much identical to the exemption for business travel under the package travel regulations, and it basically captures the situation where a business travel company is selling flights, whether on their own or as part of a package, to a business traveller, and those transactions will be exempt from ATOL, provided that there is a framework agreement in place which governs the sales of all business travel between the TMC and the particular company. So I think that's it in terms of exemptions. If we can flip to the next slide, please, and I'll hand over at this point to Jake, who's going to talk about the practicalities of the ATOL scheme.
Thank you, Rhys, and good morning, everybody. Thank you for joining this webinar today. So I'm conscious that we're working against an hour for this webinar. So at a very high level, I'm going to walk you through the starting point for obtaining an ATOL, the new application process, so a bit more about what's involved, how to maintain your ATOL and what it takes to do that, different types of security that the CAA may insist upon as a term of your license, and lastly, we'll touch a bit on ATOL reform and what may be coming down the line in terms of changes to the ATOL scheme. If we skip to the next slide. So where to start? How do you obtain an ATOL? There are various different routes that you can go down to obtain an ATOL, some of which will be better suited to your business than others. So the first option is to apply directly to the CAA for either a small business ATOL or standard ATOL. This is the area that we're going to focus on in this presentation, but you also have the ability to apply via either a franchise or accredited body. The main difference between a franchise and an accredited body is that as a member of an accredited body, you are not granted your own ATOL, you are simply given the ability to trade under the accredited body's ATOL. Next slide, please. So we're going to focus on applying directly with the CAA, but whichever route you go down, there are a number of obstacles that you have to overcome before you're in fact granted an ATOL. I've boiled down the process into 5 stages. The first stage is that you ultimately need to submit an online application to the CAA via its CAA ATOL portal. The second stage is that you need to provide accompanying financial information. So if you're a startup, you need to provide the CAA with a certified opening balance sheet and financial projections. If you're an existing business with a trading history, then you need to provide the CAA with your latest set of accounts and also a set of financial projections. Stage 3 and stage 5, I'm going to go into a bit more detail on the next couple of slides. So I'm going to just skip to stage 4, which is a meeting with the CAA. Essentially, this just gives the case officer who is looking at your application the opportunity to ask any questions they may have, or equally, they may have already come to a decision and are simply wanting to talk you through that decision and perhaps the terms under which they will grant you an ATOL. So if we skip and we'll go into stage 3. So the CAA's assessments can broadly be broken down into 2 parts. There's a financial assessment and a fitness and competence assessment. The financial assessment varies upon your license size. So if you're a small business ATOL or a smaller standard ATOL, the financial assessment is scorecard driven, which essentially means that the CAA take your latest financials, plug the numbers into a scorecard. The scorecard analyzes those numbers as financial ratios, which are shown summarized on this slide. And the scorecard will return either a pass or fail result. If it's a fail result, it will be accompanied by a cash injection requirement. Now, the starting point for the CAA when an ATOL holder fails the financial criteria is X amount of cash needs to go into the business in order for it to meet financial criteria. The CAA does, however, have the discretion to still grant or renew an ATOL without meeting the financial criteria, provided it can be satisfied in other ways. There are quite a few ways, but generally that means financial security. And we'll touch a bit more on financial security a bit later on in the presentation. If you're a larger standard ATOL holder, which are those businesses that are authorised to sell in excess of £20 million worth of ATOL protected sales in any one year, you are subject to more in-depth financial assessment and monitoring by the CAA. That was the department that I used to work in. It is typically comprised of finance professionals. Businesses on that end of the scale are under far more scrutiny. The conditions tend to be far more comprehensive and more tailored. One other point before we move on is typically the CAA, if an ATOL holder is part of a group of companies, it will assess it on a consolidated basis. That's not always the case. There are some exceptions, but generally that is the rule of thumb. So if we move to the next slide, we'll talk through the second half of their assessment criteria, which is fitness and competence. Now, the CAA must be satisfied with the fitness and competence of individuals appearing to control an ATOL holder. The definition broadly for that is directors, individual shareholders, and any other individuals that do not hold title of a statutory director, but in practical terms do have the power of one, essentially. I've broken down this process into 4 steps. The first step would be that you would need to upload ID documents for all of these individuals. Documents that are typically required are a certified passport or driving license, proof of address, such as a utility bill, and a CV. Once you've uploaded all of the documents, you'll be required to nominate an accountable person. Now, an accountable person must be a director of the company and will be responsible for ensuring that the ATOL holder complies with the terms of the ATOL regulations, and the ATOL standard terms. In order to equip an accountable person to fulfill this role and to enable them to better understand what's involved, the CAA has introduced an online accountable person course. At the end of the course, there is a requirement for the accountable person to pass a test. Now, don't worry, if you fail the test first time, that doesn't mean you're not fit or competent. But what it does mean is you need to pass this test. It doesn't matter if it takes you once or twice or 3 attempts. You do need to pass, and the CAA will not grant you an ATOL until the fitness checks have been processed and an accountable person has passed the test and is considered to meet the criteria. Once those 3 steps have been met, the fitness checks themselves are processed. When processing a fitness check, the CAA, in terms of fitness and competence, will look at a number of different areas. Some examples will be, has the individual failed to comply with the ATOL regulations or any other regulations in the past? Has the individual got any criminal convictions? Has the individual been involved with a failed ATOL holder in the past? Those sort of things. If we move on to the next slide, please. So provided you meet the CAA's financial and fitness criteria, you should get to a position where you are issued an offer letter. An offer letter is essentially a decision letter that sets out the requirements necessary for them to grant you an ATOL. I won't go through all of the requirements on this slide in the interest of time, but these are the typical requirements that the CAA expects of new applicants, generally speaking. I will talk about one or two in particular though. So new ATOL holders are generally required to provide security during their first 4 years of holding an ATOL. Traditionally, this used to be provided in the form of bonds, but since the pandemic, the bond market has shrunk considerably. It is a lot harder now to secure new bonds. So what we have seen since the pandemic is alternative forms of security become more commonplace. I'll talk through some of those different types of security on a later point in this presentation. Next slide, please. Now, provided that you've met the financial criteria, the fitness criteria, you've met all of the terms on the offer letter, you're finally an ATOL holder. It's definitely cause for celebration. You know, it can be a long, drawn-out process, 6 to 8 weeks, maybe longer. It's no mean feat. It should be celebrated, but sadly, your relationship with the regulator does not end there. There is still a lot that goes into maintaining an ATOL. Some of those requirements are summarized on this slide here, and we'll dive into these a bit more on the next few slides. Next slide, please. So the first is ATOL protection contributions, which are more commonly referred to as APC. APC is a flat £2.50 charge payable by ATOL holders for each person who books a flight inclusive package or flight only seat that is to be covered under their ATOL. So if it's a flight only seat, it's not covered under any of the exemptions that Rhys and Lucy touched on earlier in this webinar. As an example, if you were to, a couple was to book a holiday with you, a flight inclusive package with you, an APC charge of £5 would be payable for that. ATOL holders are required to report their booking data to the CAA, which is essentially the mechanism that is used to, 1, track your ATOL limits, make sure you're not over trading, and 2, to collect these APC contributions. The type and size of your ATOL will determine when and how frequently you report, which is summarized on the table on the right-hand side of this slide. What it essentially tells you is that the larger you are, the more frequently you have to report and pay APC. APC contributions are paid to the Air Travel Trust Fund. And as Lucy mentioned earlier, the Air Travel Trust Fund uses these monies to protect consumers in the event of an ATOL holder failing. So if you have a forward booking, it will process your claim, you'll be reimbursed. And if you're stranded abroad, the CAA has a responsibility to bring you home. Next slide, please. ATOL renewals. So it's important to say that ATOLs are valid for no more than a period of 12 months. Therefore, each ATOL holder is required to apply to renew its ATOL at least once every year. Similar to a new application process, you'll need to submit an application. You'll need to provide updated financials. Once the information is filed, the CAA will undertake a renewed financial assessment, similar to what we've already just spoken about, almost identical. And the premise is the same. If you fail the criteria, the starting point will be a cash injection requirement. There is the opportunity to negotiate on that in terms of security, and we'll touch on the security point a bit later on. Next slide, please. Annual accountants report. So there's a lot of acronyms when it comes to the CAA, ATOL, AARs, APC. For ease of, instead of saying annual accountants reports all of the time, we usually refer to these as AARs. AARs were introduced by the CAA a number of years ago to help improve the standards of ATOL reporting and provide assurance that the information that was being provided to them was accurate. So annual accountants reports come in 2 parts. Part 1 is essentially a summary of the booking data that has been submitted by the ATOL holder to the CAA via the APC return. So essentially, the CAA is seeking third-party assurance that the APC reporting is accurate and the ATOL holder is not under or overpaid on its APC contributions. Part 2 contains extracts from the ATOL holder's latest standalone or consolidated financial statements. that part 2 is what is used to populate the CAA scorecard. So the CAA generally will not process your renewal without a signed part 2. Both annual accountants reports need to be signed off by an ATOL reporting accountant. White Hart Associates has a number of ATOL reporting accountants. Similar to accountable persons, they need to go through a form of training before they're given ATOL reporting accountant accreditation, and they also need to hold a professional finance qualification. Next slide, please. ATOL variations. So in addition to renewals, which are mandatory at least once a year, ATOL holders are also obliged to inform the CAA of other changes, some of which require pre-approval before you enact them. We refer to these as variations. Similar to new applications and renewals, an online application needs to be filed that outlines the requested change. There are, on this slide, I've given some example scenarios of where you would need to submit a variation. I won't go into all of them in detail, but what I will say is that where you're seeking to increase your license limits, please make sure you do that ahead of time and not retrospectively. The CAA doesn't like it when you've already overtraded on your license before you submit to increase your limits. So just bear that in mind. Changes in ownership, changes in financing arrangements, the CAA take a very strong interest in these types of changes. You do require pre-approval from the CAA before undertaking any of those changes. The process can take several weeks for the CAA to approve. So if you are ever in this situation, we would always highly recommend that you engage with the CAA as soon as possible. Next slide, please. Now, just generally here as well, there are, in addition to what we've just spoken about regarding maintaining your ATOL, there are also a number of other standard terms that ATOL holders are required to comply with. I've provided some examples here. It's not an exhaustive list, but it just gives you a bit of a flavor of some of the other things that you need to think about as an ATOL holder. The first is publicity material standards. So there are certain disclosures that you need to make on your websites, brochures, any sales documentation, examples such as that. There is a uniform requirement for ATOL certificates that you need to issue to consumers upon a sale. There are certain business system requirements that you are required to meet. And as Lucy and Rhys touched on earlier, there are agency agreements that need to be in place where you are selling through the trade. Next slide, please. So security, we've already touched upon the need for new ATOL holders to provide security in their first 4 years of holding an ATOL, but there are various other circumstances where the CAA may insist upon financial security. Some examples of that would be where an existing ATOL holder does not meet the financial criteria, where the CAA may have other concerns, such as from a compliance perspective, or, for example, there may have been a recent change in control where they are requesting security. So there are a number of different circumstances where this issue could arise. You will not be surprised to hear that security requirements have ramped up quite significantly since the pandemic, with virtually all travel businesses at least some point in the last 24 months being impacted heavily by little to no trading activity, compounded by high levels of exceptional levels of demands for refunds. So it's no surprise that we've seen this uptick. I won't touch on all of these different types of security that I've summarized on this slide now, because I don't have the time, but I will touch on a couple in particular. The first is trust or escrow accounts, which is the mechanism by which the CAA can enforce travel businesses to segregate customer monies that it receives in advance from operational cash. We've seen an uptick in these types of arrangements. It works for some businesses, it doesn't for others. There are concerns that this may become a mandatory requirement in the future. We'll touch on that a bit more on the next slide, but The other area that I wanted to touch upon here was liquidity tests, whereby ATOL holders can agree with the CAA to maintain a minimum level of free cash and/or minimum level of cash cover relative to customer monies that it has received in advance of departure. The cash to customer monies ratio benchmark for the CAA is 70%. They're typically satisfied at that level. And the trade-off to agreeing to these sorts of tests is that you may not have to provide any other form of financial security, but that is not always the case. I will say as well that with a little creativity, there are means by which you can potentially negotiate a more favorable liquidity profile with the CAA, which we have in some circumstances been able to achieve for our clients. Next slide, please. Finally, before we move on to questions, it would be amiss of me not to at least mention the CAA's ATOL reform consultation. So the CAA published phase 1 of its consultation on reforming the ATOL scheme last year, and it invited views from industry on proposals that the CAA could introduce to improve the financial resilience of ATOL holders and reduce the use of customer monies as a primary source of funding. There was a high level of engagement on phase 1 of the consultation, over 300 respondents from a number of different stakeholders in the industry. Some of the topics that were being proposed in the consultation are summarized on this slide, including mandatory segregation of customer monies through trust or escrow accounts. A senior representative of the CAA has publicly admitted that there was not strong support for mandatory segregation of customer monies, unsurprisingly, but there is an overwhelming majority in favor of having choice. You know, the ability to choose various different security mechanisms that could satisfy the CAA. How the CAA will respond to that is still unclear. We will know more when phase 2 of the consultation is published. We were hoping that was going to be early this year, but the CAA are having all sorts of resourcing issues at the moment. So it's likely to be pushed further into this year, perhaps even the second half. But once phase 2 is published, that should start to make it a bit more clear what the specific proposals are going to be by the CAA. And I suspect that there will be more webinars and things of this nature to talk through those proposals. But in the meantime, thank you very much for listening. Needless to say, I have had to cover some of these areas in very high level, but if there is anything that you would like to talk through in a bit more detail, please feel free to reach out to me at a later date separate to this. Thank you.
Thanks, Jake. Don't go away because there are some questions which have been posted, some of which I'm going to come to you for. I'll take them in order, actually. So first question for Lucy, I think. Can travel companies use their ATOL to sell package holidays to Ireland, or I suspect any other EU member state?
Good question, and the answer is no, not anymore, unfortunately, since Brexit. Before Brexit you could have done, but now ATOL only applies to sales within the UK. So if you're looking to sell to Ireland, you now need to meet the insolvency protection requirements within Ireland, and with Ireland still being an EU market, that would then cover other EEA sales, but the UK is now ring-fenced and is treated separately.
Very good, very good. Jake, I'll come to you for this one because it's actually directed to you. Jake, could you explain the liquidity requirements in a bit more detail? You mentioned a figure of 70%.
Yeah, so the 70% is a common, it's what they call a cash to client monies ratio. So it's a cash cover ratio. How much cash are you holding relative to the amount of customer monies you're holding in advance of departure? The benchmark that the CAA typically works against is 70%. which is doable for some and not for others. So it's not a one size fits all, but it's quite a useful mechanism where it is doable. What I would say is that it's not the end of the world if you can't meet that metric. You have to get quite creative with the CAA in terms of negotiating security terms when you're not meeting that level, but it is manageable, but it's on a case-by-case basis. It's not something that's easily done. It takes quite a lot of creativity and expertise to be able to get to that point. So I can't go into any sort of specifics on that, but hopefully that explains a bit more about that liquidity requirement that the question was mainly asking about.
Thanks, Jake. I think the next question for Lucy, and then there's one that I might just pick up on. So for Lucy, you mentioned the so-called airline ticket agent exemption under ATOL, but such exemption is not listed in Official Record Series 3. Where can I find the detail for the airline ticket agent exemption? This is a two-part question. And then how does this exemption differ from the IATA exemption? Is it essentially a different type of exemption for non-IATA carrier sales?
Okay, so first part, the airline ticket agent exemptions in the ATOL regulations themselves, regulation 10 and 13, if you want to have a look at them. So they're spread between ATOL regs and the official series 3. How does the airline ticket agent differ to IATA? Yes, I mean, not all airline ticket agents are IATA accredited. So IATA accredited was introduced later because it was felt that IATA, because of the way payment worked under IATA, the requirement to the written agreement requirement is met through the IATA, forget the name of the passenger sales agency rules with IATA, so there's no need for a written agreement, and the payment mechanism through the IATA system is not immediate. It's every 2 or 3 weeks, every month. So they're similar but different, and yeah, one applies to IATA accredited agents and one not.
Okay, I might take up this question. So, may I check this is a valid exemption? We are a travel operator and we buy flights for our clients from an ATOL registered flight travel agent and invoice our clients for these costs. More than 24 hours later, we then invoice our clients for the other elements of the trip. So I think depends very much on the detail here, but I think there's probably a couple of issues to be aware of here. The first one is if the customer has come to you and agreed to buy a flight, accommodation, car hire, and you then invoice for the flight, and then 24 hours later, 48 hours later, whenever, invoice for the hotel and the car hire, that would be a package sale, because the way that the package travel regs works means that you can't avoid something being a package by just invoicing for it separately. It will be a package if the customer has decided what they want before they go on to make payment, and whether they make one payment or a series of payments, it doesn't really matter. It's still a package because the customer decided on the bundle of products that they wanted. The position in Germany is slightly different, but we'll stick to the UK for now. So it could be a package. If it is a package, then there is unlikely to be an exemption here, unless the organizer of that package is this third party that you're sourcing the flights from, which it doesn't sound as though it is. Second thing is, if this was just a flight only sale, then there could be an exemption. I think it depends obviously on the circumstances. It doesn't sound as though any of the sort of agency exemptions would apply, because this is a situation where the travel operator seems to be buying the flights from a third party and then reselling it to the customer. So that would, and because the purchase of the flight isn't directly from the airline, that would probably rule out the flight only ticket fully paid exemption, the IATA exemption, the airline ticket agent exemption. So I would think if I was looking at exemptions, given that this third party that you're buying your flights from is an ATOL registered flight travel agent, if they're ATOL registered, so I'd look at whether you can change your relationship with them to take advantage of the agent of the ATOL holder exemption. So you'd be selling under the ATOL of this third party. So it's rather long-winded, but I think that's probably the answer to that. Got a question here. I think this is probably more on the practical side of things, although I'm not sure there is a clear answer to this actually, but I'll maybe this is one to be discussed, but Jake, I'll come to you first on it. It says, ATOL flight only certificates. Please clarify if all flight pricing should be shown on this particular certificate. There has been varying comments. I think the person who's posted this thinks that there are different opinions on this.
Sure. I think technically speaking, the flight cost should be on a flight only certificate. But there are circumstances whereby, for example, an ATOL holder may sell, well, actually, that's kind of irrelevant. I'm pretty sure you have to put the flight costs on the flight only certificate, but I would need to refer to the guidance. If whoever's raised that question wants to reach out to me separately, I'd be happy to look it up for them quickly. I'm sure you do, but it's best to refer to the guidance first, and we can come back to him or her.
I think you're right, Jake, that you do need to put the flight price on the certificate. What I think where sometimes it's not clear is where the clients may then subsequently buy extra legroom or adds baggage and pay more for it, and does that mean you then need to reissue? So I think that's where it's actually not clear and under the guidance issued by the CAA. But I think on this sort of thing, I think probably you do have to include all of that within the flight price on the certificate. But I think this is a perfect example of something where the CAA does have an email address for these sorts of queries, and often I just reach out to a contact on these sorts of queries to see what they're, because it's not clear and it's just a matter of process really. So
yeah, I mean, I know for a fact that you do not need to disclose the cost on a package certificate, because a package certificate has to be accompanied by a supporting confirmation, which would have all of the details on there, including flight information, prices, etc. But I think when you get to issuing either a multi-contract or a flight-only certificate, you have to disclose the price. I would need to refer to the guidance before being able to confirm.
Good. Lucy, this is probably one for you, and I think the question is actually linked into an earlier talk we gave around enforcement. So what level of enforcement have we seen from the CAA in terms of compliance with ATOL? And do you expect this to increase? So, I mean, we obviously did a talk about this about a month ago, Lucy, so I think that's probably one for you.
Yeah, it's quite a timely question. But yes, they do enforce. The CAA have limited resource. I don't think that's any secret, so perhaps there hasn't been as much as they would like, but there is new legislation coming in, which means the CMA will be able to take more action against travel companies if they don't comply with consumer legislation, and this is effectively consumer legislation. So I think when this legislation comes in later this year, I think there might be more of an increase on enforcement. So yeah, timely question, and watch this space.
Maybe one for you, Jake. Please could you explain how the £2.50 is applied for flights? Is it per person per flight?
Yes, so it's a charge per person, not per booking. So if there's three individuals on a booking, you would need to pay 3 sets of £2.50, so £7.50 charge in that example. The only time that APC wouldn't apply is for infants. So anybody under two years of age, they would not need to declare that for APC purposes. And just following, coming back to that earlier question, I had just checked the guidance, and you do need to declare cost of a flight on a flight-only ATOL certificate.
Quick work, good stuff. There is another question here, probably one for Lucy, which I think the essence of the question is asking about the interplay between ATOL and the package travel regulations. So perhaps you could deal with that, Lucy.
Yeah, this when you talk about liquidity requirements for sales into the EEA, would financial failure protection as required by the package travel regs cover this? Is there an additional EEA equivalent ATOL license that is required for EEA sales? So firstly, does financial failure protection cover you into the EEA? It depends on the market that you are established in. So the test is to be established in an EEA market, and you must satisfy the requirements of that market. So France, Germany, Ireland, and it depends on what the requirements are in France, Germany, Ireland, whether it be insurance, bonding, letters of credit. Different markets have different requirements. Then the second part of the question, is there an additional EEA equivalent ATOL license that's required for EEA sales? It's the same answer. It depends on the market. So yeah.
Okay, thanks, Lucy. I might deal with this question. So sometimes a client will book a non-flight package with us and then call back at some point before departure and add flights to their booking. When this happens, sorry, question's just moved. When this happens, we treat the booking as a licensable package from this point. Is this correct, or should we make a separate flight-only booking and therefore need flight-only organization? I think actually you have you have an option here of what you want to do. So if you sell a non-flight package and then there's no discussion about flights, then the insolvency protection around that is obviously covered by the package travel regulations. So whether it's an ABTA bond or trust account or financial failure insurance, if the customer then comes to you later to make a separate transaction for a flight, then that doesn't automatically kind of convert the original non-flight package into a flight package. You could do that if you wanted to by effectively amending the original package to make it a flight package, and then you'd have to issue the ATOL certificates, etc. Alternatively, you could just treat it as a flight-only sale. But if you were to do that, you'd have to be very clear that this flight-only sale wasn't an amendment to the original package. It was its own separate standalone transaction. And you need to make sure that the paperwork reflected all of that. That may or may not, then that flight-only sale may or may not need to be covered by ATOL, depending on whether you can take advantage of an exemption. I suppose the only final thing to mention is the possibility of a linked travel arrangement being formed. I mean, I think on the facts presented, if it's a customer leaving your website, or you end the telephone call and then there's no discussion on flights, and then the customer comes back to you later to buy the flights, then that wouldn't be a linked travel arrangement. But obviously it depends on the particular circumstances. You'd need to be very clear with the customer in the paperwork about what that second transaction was. So I think it's 10 o'clock. So we said we would guillotine at 10 o'clock. So I am going to guillotine at 10 o'clock. And I'd like therefore to thank Lucy very much and to thank Jake for coming and speaking to us today. I thought the session was very helpful, particularly on the practical aspects, Jake. So thanks very much for joining us. And like I said, we will circulate a copy of this recording and also a copy of the slides. And naturally, if anyone has any questions that they'd like to follow up on, then our details will be on the slides. So please do feel free to contact us. Thank you very much.
Thank you.
Thanks, everyone.